Hi, Personal Finance Time with Charles Fakroha. Well, today we'll be talking about something I find quite interesting. That's the basics of investment. Thanks for joining us today, Charles.
Thank you, Perpetua. I can see you have a new company. Samuel, are we?
Yes, okay. Good to have you, Mr. Charles.
Yes, you're welcome.
Thank you very much.
Myself and Pepe will be presenting, and he will be our guest, are we? Remember, what's our topic for today?
Well, basics of investment.
Yes, we started this I think on Monday, and we looked at some basics of investment. We looked at savings, investing, and of course speculating. We're able to differentiate those three.
Okay.
Now, we are looking at the basis of investment. And for your personal finance, I mean, this is the festive period, and this is the best time people should begin to be more concerned about their finances now, because the season, the way it is, you are prone to make spending that you didn't even plan for.
Sure.
So this is the best time to take your personal finance very, very seriously. So, and that's why we are discussing the basis of investment. Now, as a worker or even as an entrepreneur, you need to understand some little basis when it comes to where you want to invest.
Okay.
And the first thing we normally advise as financial therapists, advise people is, apart from your full-time job, or if you run a business as an entrepreneur, what other investment you can do that while you are sleeping, that investment will continue to work for you. If you are a specialist surgeon, once you are not there in the theater, you're not earning. That's the truth.
But it depends if your name is not on the roster for the day.
Okay.
it's
true. And you are not even doing any other thing.
Okay.
But we're not saying, hold on, you can do some investment. Your money continue to work for you while you are sleeping. You need to understand that investment. And the first one we have been advising is, you invest in the financial markets. Yes. Where you have seen tested professionals who have been running certain companies for quite some time. Now you're looking at the fundamentals of those companies.
All right, when you say, because if I'm trained as a surgeon, I don't know so much about, I don't know the rudiments of finance and investing and all of that. Do I have to learn all these things all by myself, or isn't it better I probably get a company, say some of these investment bankers or some of these, companies that do things like this? Isn't it better I just pass that to them?
Good. It's good you just pass it to them. And that's why I say basis. The basis. You need to understand the basis of where your money is going into. We call that passive income. Now, we're not saying become a technical analyst, understand the fundamentals, everything, but just know that once you invest in a particular company, I will advise you need to understand what the company is doing.
Okay.
Let's take company XYZ PLC. They produce household item that you yourself consume on a daily basis, consumer goods. And no matter what happens, you want to make use of those products. So there is markets. Even when inflation gets to about 21.47% now, inflation figures, or even when the price of fuel goes to how much now, 300 naira per liter, or even when your company shuts down, people will still make use of these products. However, purchasing power might be down.
Might reduce, definitely.
Might reduce. You still need those items. Either you reduce the quantity or you begin to manage. So you can see that these are items that are essential, and you continue to make use of them. Even if bandits are attacking Lagos, we must still make use of this item. So these are basic necessities, essentials that we need. So if you invest in those kind of companies, you are very sure that they will continue to sell. Your question?
All right. So when it comes to, because I'm very particular about investment.
Okay.
When it comes to investment, outside the aspect of you making money from it, how can an individual know that this is a good investment for you as an individual?
Okay.
Outside the aspect of making money.
Okay. Yes, I agree with you. As a new investor, you are investing for yourself, the present, and of course, for the future. And you want to put your naira, or is it dollar? Okay, it's naira.
Yeah.
You want to put your naira now for something that will give you another extra
Income.
naira or income, you know, and you are looking for safety. You're not even looking at the return.
Safety should be your prime concern, not just what you're investing in.
Exactly. Safety, one, safety of your investment, safety of your money is very important.
Okay.
You're also looking at the returns.
Yeah.
It's also very important.
Yeah.
You're also looking at your timing, the horizon, how long. Then you're also looking at liquidity. If there is a crisis, the emergency fund has been depleted, you want to quickly, how soon is it possible for you to convert that your investment to cash to solve your immediate needs?
Okay, now that you have talked about this, I'm looking at the stock market now. If I have it at the back of, beg your pardon,
Yes.
if I see my investment as shock absorber so that whenever there is a problem,
Yes.
I might just have to liquidate and all of that. Does that mean that I should go for high cap stocks? Because at the end of the day, when I liquidate that, I'll probably get more cash compared to when I go for low cap stocks. So I mean, how should I go about it?
It depends on it. High cap stocks, you probably invested so much to have little units. Low cap stock, you invest that same amount, you get
More.
like volume. So at the end of the day, the value is still the same. Because if you are selling 10 units of Nestle and I'm selling 1 million units of maybe computer warehouse, you know, you can say at the end of the day, you're equally getting the same amount of money. So the stock markets can still, or your investment can still play that role as a shock absorber. The bet, is it easy now to liquidate your Nestle investment? Is it that easy? These are the things you have to look at. You know, and that's why I always advise that please have your emergency fund separate. If you have that, you don't need to come to your investment. You go to that emergency fund and take out money to solve your problem. However, we are saying if things get to the extreme, you have exhausted your emergency fund. Of course, you can't have an investment and there are problems. You need to fall back to it and see how, you know, because of course once somebody once said, if his building, his office is burnt, everything, but he's able to go away with his client list, the next day he's in business. So he will still come back to invest again after you have been able to solve your problem.
All right, talking about basics of investment, I think you've not really talked about the instruments.
Yes.
How and where can, you only talked about a company, but how, where?
Yes. Now, the first thing is investing in the shares of these companies. We normally call them securities.
Okay.
Yes, and there are several types, you know. But have it at the back of your mind that you are providing capital for these companies to operate. And that is the basis of any stock market investment. You are becoming a part owner of that company. So you are looking at the shares of the company. Now, when you invest, you are giving the money to the company to improve their operations, expanding their horizon. They'll be able to employ more people, produce, distribute their goods or services as the case may be. So you can see that you yourself, as an investor, you are contributing to economic development. So we should not look at that aspect of speculating. I am buying today and selling tomorrow. That is also another aspect, and that's why we call that speculation. That for us will not be investment. Like Warren Buffett will say, if you cannot hold a company for 10 years, don't own that company for 5 minutes. That is, he sees a company that is not doing so well, he invests in that company, continue to grow that company. At the end of the day, he's making so much money from that company. However, there are some other aspects of investment, which is speculation. They say, no, look at this company, okay, the price is going to get up. You invest, once you see an appreciation, you've gotten 10%, 20%, 30%, the case may be, your objective, you sell off. and you take your profit and you move. There's nothing wrong with that. That is your own investment philosophy. But you need to understand what are the benefits of this your investment. That is the basis. I invest in the shares of an XYZ PLC company. At the end of the year, what are the returns are they giving to me? Am I satisfied? Have I gotten capital appreciation? Am I satisfied with the management of this company? What they are doing? Because you could also be an environmentalist and you say, okay, no, I've invested in this company and the way you are managing your wastes, you have caused a lot of pollution. So the only way you can speak as an investor is to withdraw that your investment by selling off.
All right, so apart from the shares or the stock market
Yes.
you've talked about, we would like you to talk to us about other instruments also
Okay,
that we
good.
can consider.
Yes, there are what they call bonds.
Okay.
And some people might say it's a debt. That is, you don't want to own part of the company as an investor. You just want to lend them money.
Throw in your money there, let them do whatever they want
Yes,
to
you
do.
give them your money. At the end of the day, you're not interested in whatever profit they have made. The agreed interest, which they call in investment jargon, they say is the coupon. Maybe it's 10%.
I think it's similar to the what they call in the banking system fixed deposit account, right?
Well, yes, you can look at it from that aspect of it. And at the end of the day, the company is making their profit, it's not your business. All you know is, okay, I've given you 100,000 naira and we have agreed on this particular rate. This is what you are giving to me. Maybe it is twice in a year,
Quarterly?
quarterly, as the case may be. So you are a creditor to that company. And in investment parlance, they say you are a bond holder. You are not a share holder. That's also another instrument you can use to invest. But again, we are now saying some of these investments can be a little bit complicated. I mean, you don't expect a surgeon to become, we'll go back to the classroom and become an investment expert. You can ask, okay, I can't understand all these companies. I can give it to, there are professionals who run what we call a mutual fund.
Okay.
A mutual fund. So in a mutual fund, they collect money from so many, we call it collective investment. They collect money from so many persons and they have professionals. They say, okay, we're investing this amount of our fund in a particular company. They will invest in different instruments. They can invest in the stock market, they can invest in the real estate market, they can invest in upcoming companies. But at the end of the day, the returns will come to that fund
Let me come to this.
and they will
mutual-
share it according to what you have invested.
Let me come to mutual funds now. I'm looking at someone who is trying to be ethical. Like, I do not want to invest in some companies with alcohol,
Yeah.
or some of these other things that I probably do not want to invest in.
Companies that produce ammunition and all that.
Yes, exactly. So if I'm doing mutual fund, will I be able to guard against that?
Yes, because the mutual fund, they have their prospectus.
Okay.
A prospectus is the document that shows what
Where-
the company
okay.
is doing, the kind of investment and all that. You are expected to go through it. And if you see that, or if you see a particular politician there that you don't even like, that can make
You know what
take
I'm
a
asking? I'm
decision
asking
there.
because some of these things, some of these companies have simplified the process. I mean,
Yes.
with your phone, you can buy, I mean, you can pay into a mutual fund and all of that, without even having all the information you're talking about now.
because that's what you wanted on the go. You can also go, that's why we advise that you do a little extra work. Go the extra mile. Understand if I'm a fund manager now and these are the companies, I'm expected to show you as my investor. These are the companies we have invested in. Yes, it is your right to know. And if you see a company there that is polluting the environment, you don't like them, of course, you take off your funds away and go and invest in another fund manager that are ethically conscious.
Okay.
You know, this is the only planet we have. We can't go any other place.
You're talking about the environment. But of course, beyond the environment, there are other things people are concerned about. Like I mentioned, the issue of alcoholic beverages
Of course,
and arms and
it's all part of what they call
yeah.
ESG, environment, social, and governance.
Exactly.
A company cannot be doing so well, paying you so much that you are happy, but they are using child labor. That's illegal. So you giving them your money to going to produce, you are supporting child labor. Or in terms of corporate governance, a company that is underpaying their staff, underpaying their workers, that means you're also encouraging them to continue. In advanced climb, we have seen where investors will sack management because of unethical practices. Because if you continue, it shows that you are supporting them. And the average investor has gone beyond just giving money to an investment manager and it goes. They need to check those investment managers. And your 1 naira goes a long way in ensuring that companies' management are on their toes in terms of how they produce, how they relate to their workers. You know, you cannot have, I won't mention the name of a bank now, where you have over 80% of the staff are casual staff on contracts. And at the end of the year, they're declaring billions. As an investor, oh, I bet somebody has worked 5-10 years, is still a contract staff. That is an issue of a social problem. It's not about the environment now, you can see. And that's why when we're talking about ethical investment, we're talking of ESG, the environment, the social, and of course, the corporate governance.
All right, we've talked about three. Okay, go ahead.
All right, Mr. Charles, going back to investment, you know, some people have this belief that they better don't fund somebody else's business because it looks like you're living the dream of that person. Okay. You know, they better do that on their own business. What do you think it is okay, so to speak, to say somebody should invest in another person's business, or rather use that money to invest in your own business?
Okay, you know, when we started, we were talking about passive income.
Okay.
You are already engaged, maybe as a professional, okay, or as a government worker, you know, and you don't have the time. We must just agree and know that not everybody is cut out to be an entrepreneur.
Even an entrepreneur can also have the business and invest in other instruments, just to augment everything.
So if you believe that you have passion to start up your own business, of course, no matter how small, you can start it. You give it 100%. But we're looking at a situation where you want to be sleeping and allow your money to be working for you. So allow that man who has been doing it, support him, and at the end of the day, excuse me, if he has managed it very well, of course, you also get some return. And that's why you people are the owners of the company. So we have seen investing in shares, in bonds, of course, the mutual funds. Yes, there are other investments. We also mentioned it's real estate investment.
How does that even work?
Yes, for real estate investment, yes, we've been told that you need a lot of money to start real estate, but that is not 100% correct. There are companies in the stock market today, we call them REITs, that is real estate investment trusts. They're just like mutual funds or exchange traded funds. What they do is they are registered, they collect funds from the public, and over 90, or let's say about 90% of the money they have collected goes into investing in real estate. Of course, they are regulated by SEC. So they collect all your monies and they go into real estate investment. So you, with your 5,000 naira, you are also owning part of the real estate they are investing in. And of course, the returns come from rents, managing of such facilities. At the end of the year, quarter, the case may be, that you have agreed how they will distribute the profits. Yours also come to you. So you can see you don't need to have so much money to go into real estate investment.
All right, you said something about regulation, SEC regulating some of these companies. Now, how do I ascertain that the company I'm investing in, for example, there are those people who also, like I said, also from their phone, they invest in, I mean, a lot of things. So how do I ascertain that the company I'm investing in is registered? And then are we also sure that all companies that are registered by SEC or what have you are actually, you know, good companies? Are there those that are registered? And at the end of the day, irrespective of the registration, we find out that it's a Ponzi scheme.
Yes, it does not mean that because you are registered that you perform. We have seen companies registered, monitored by SEC, at the end of the day, they still fail. I'm not even,
I'm interested in Ponzi, being able to differentiate.
Yes, you see, for Ponzi scheme, again is knowledge. There's a difference between a Ponzi scheme and network marketing company. Ponzi scheme don't have any product they are selling. They're just robbing. Is it robbing Samuel to pay Joshua?
I think they call it money doublers.
They rob Samuel to pay Joshua. That's what they do. Or they rob Peter to pay Paul. Okay, let me use that. That's what they do. There is no product. But for a multi-level marketing or network marketing, you will see the product they are selling.
And they have an office, like
yes.
a contact point.
So the more people you bring to buy that product, the more you begin to earn. They call it leverage. If I introduce you, I will sell the product to you, you will buy. It will be registered. You will sell to Samuel. Samuel will use the product, he will buy, you know. So whatever you are doing, I'm also getting the benefit. That is multi-level marketing, not Ponzi scheme. So for Ponzi schemes, anyway, it was started by my namesake, Charles Ponzi, as far back as 1930-something, an American. And over time, the issue there is greed.
Yeah.
How will people come and promise you that bring 100,000? Tomorrow we'll give you 100,000 naira.
Well, I think that's an interesting conversation talking about Ponzi schemes, but
yes.
This is a conversation that will continue
of course.
At some other time. Thank you so much, Charles.
Well, let me just
sharing your
conclude.
thoughts.
Love is the most important thing in this season. And those who make money now, they show love. And love is that factor that distributes money in this world. Feel good anytime you spend money. Don't complain, even if...
Thank you so much. We have the conversation here. Thank you so much. I know you have a lot to say. I mean, it's been an amazing time with Charles Fakroha on personal finance. And talking about basics of investment, I guess you had a great time listening to him. Well, this is the point where we wrap up the show. Many thanks for staying with us today. But before then, let's bring you the quote for the day. This is by Ava DuVernay, which says, "I'm not going to continue knocking that old door that doesn't open for me. I'm going to create my own door and walk through that." Well, that's quite interesting. Many thanks for staying with us today on the show. My name is Perpetua Fasanami Peter.
And I'm Samuel Wukata. Hope you enjoyed your day, and bye for now.